3M company is one of those stocks where the market likes to give it a premium valuation, but over the last year, the stock price for 3M looks more like a skiing hill, so let's take a closer look at 3M company. I think most people know this, but 3M has paid dividends to shareholders without interruption for more than 100 years, and it has increased the annual dividend for 64 consecutive years, meaning that 3M is a dividend king and a dividend aristocrat, because it is a part of the S&P 500, and it has also a high enough valuation, high enough volume in trading, and has increased the annual dividend for at least 25 consecutive years. Also recently, 3M announces plans to create long-term value through the spin-off of a healthcare business. So it's announced to spin off the healthcare business, and they will result in two world-class public companies well positioned to pursue their respective growth plans. And the new 3M will still remain a leading global material science innovator, and the new company can then focus on the healthcare. But it's not all fine and dandy for 3M, because their subsidiary Aero Technologies that have been facing increasing litigation issues related to some combat arms earplugs have now voluntarily initiated Chapter 11 proceedings. And 3M has committed $1 billion to fund a trust to resolve all the claims determined to be entitled to compensation. And from 3M side, I can see the good idea in this, because it will effectively and very quickly resolve those issues. And if there are claims entitled to compensation, they can get it from the trust fund, and that will remove the big cloud that has been hanging over the head of 3M for a long time now. But a federal judge that administered more than 200,000 lawsuits against 3M has questioned whether or not the company has acted in good faith, and if they're trying to shift the cases to bankruptcy court instead of facing separate jury trials. And obviously, if you have over 200,000 cases that needed to be settled individually, then it will take a long time, and that is something that investors would not like. And also from 3M side, they have lost 13 of the 19 test cases that have gone to trial related to this, so you would expect that a lot of the future trials would also be lost and would probably cost a lot of money and a lot of time. Well, that was some news from 3M, so let's take a closer look at the valuation. You can see here that the forward PE ratio is around 14 compared to the 5-year average around 19, so it trades around 27% below. The price to book is fairly high, but still it's way below that average over the last 5 years, around 40% below, so it could be at a pretty good valuation at the current time. It offers 14.16 in dividend, has a payout ratio of 60, which is okay, 5-year growth rate of 5.38. I think this is mostly coming from like 4 or 5 years ago. Over the last few years now, it has gone down significantly, and I expect this to be a quite low growth as well. But it has been growing the dividend for 64 years. I don't know why I say 63 here, but it is a dividend king as we talked about earlier, so there is a big safety in this company. If we look at the income statement, you can see the revenue is growing from 31 billion up to 35 billion. And if we scroll down to the net income, it's also growing from 4.8 billion to 5.9 billion. The free cash flow, which is cash from operations less capital expenditures, is also pretty good. You can see that they are growing their cash from operations quite steadily, and the capital expenditures are sitting quite fixed, 1.3, 1.5, 1.7, 1.5, 1.6. So they are growing the free cash flow as well, and that is also looking really nice. If we look at the income statement, you can see cash and cash equivalents from December 21, 4.5 billion, and not that many short-term investments. And if we scroll down to the debt, you can see here that the total debt is 18 billion, which is quite high compared to the cash on hand. So you can see net debt is just around 13.5, a bit high debt, but still it is a very big company, so I wouldn't be too worried about that, but it is a slight minus, I would say. And you can see up here that they have been repurchasing shares from 595 down to 571, so that is really good, because then you get a more ownership of the company per stock that you own. And that was how some of the numbers behind look, but let's take a closer look at the intrinsic value to get an idea whether or not the stock is over or undervalued. And to do that, we have the Graham's revised valuation model, we have the discounted cash flow model, the dividend discount model, and the multiples valuation. And I have used a growth rate of 5 in most of the cases, because that is what I could see from most estimates that they think is coming for the next couple of years. So if we look at all these together, you can see that we have Graham's being the lowest one, and we have the discounted cash flow model being the highest one, and in average it's around 127. If we compare that to the current price of 141, we get an average discount of minus 11%, meaning that it's not a good buy right now. If we apply a margin of safety, I only use 5% in this case because I think 3M is such a big company. The acceptable buy price is around 120. And as mentioned earlier, this is a company that the market likes to put a premium on, so I doubt it will ever get fully down to this buy price, but with the litigation issues still being a very big uncertainty, it probably could at some point. So this is why for me, I would love to own this stock, but I would love for the litigation issues to be resolved before I buy. So let me know down in the comments if this is a company you are interested in, and if not, I'd love to hear as well. Thank you so much for watching this video, guys, and please don't forget to like and subscribe to the channel.